Hello and welcome to another update video about Bitcoin. Today we take a look at Bitcoin from a high level point of view, just to give you an update or actually to remind you where we are, because I always get questions. I only show a short period, so I just want to spend a couple of minutes just to remind you of the overall Elliott Wave count. In my opinion, Bitcoin here, this movement since March 2020 was Bitcoin's third 1-2 setup. So while I would personally completely ignore what happened here around 2011, 2010, because it was just, you can't take it seriously really. What then happened from 2013 onwards, we had a 1-2 setup here in the first bull run basically, and then another 1-2 setup. These are all 1-2 setups. The reason for this is you cannot count this as 1, 2 and 3, 4, just due to the retracements of the wave. It just went down too much to be a wave 4. Yes, you could use the log chart. I explained it many times before. In my opinion, the log chart distorts wave relationships completely in a wrong way. Those natural wave relationships, which are so important for understanding the sentiment and what basically the Elliott waves are based on, and market sentiment and Fibonacci levels, the log chart completely distorts this, and therefore I'm not using the log chart. It is completely normal for young assets to produce these 1-2 setups. Just look at the Apple chart in the 1980s. It's the same story. You do these movements to the upside and then you come down 80 to 90%. This is a so-called 1-2 setup. Why is this so important? It builds the foundation for the future growth of an asset. The more 1-2 setups you have early in the life of an asset, the more the potential and the higher the potential in the future for that asset. I think Apple had a whole series of 1-2 setups and obviously started with a very low price, and without all these stocks splits, you would now look at an Apple price of more than $30,000. But obviously there were a lot of it artificially brought the price down with all these stock splits and so on, but that's another story. But these 1-2 setups are normal. So we had a 1-2 here, another 1-2, and this is another 1-2 at the moment. They become larger and larger, which is not unusual. And yes, there are a couple of other ways to count this. You can understand all of this. When you use a log chart, you come to the conclusion that this here was a wave 3, we're now in a wave 4. On the arithmetic chart, which however shows the most natural wave relationship, we retraced far too much for a wave 4, and we cut into the price region of the previous wave 1, so it's not possible anymore. Therefore I'm not of the opinion that this is the case. The only other valid count really that I would seriously consider is that yes, we had a 1, a 2, that this was indeed a wave 3 only, that this was the wave 4, that this was the wave 5, and we're coming down in an A. All of this was a wave A. We are now moving up in a wave B, so it would basically be looking like A to 17,500. That would be a B wave. That is the so-called bear market rally that I often point out. That's why it's possible. And then a wave C will come down maybe later in the year or next year to crash down even further. Now that's basically the only other wave count that I take very, very seriously. There's another one where we connect, another one which I don't find very realistic. You could also call that a bear market rally, but it could even lead to a slightly higher all-time high. It's a triangle pattern. It's a triangle pattern. Other way around. No, it's the other way around. It's an Elliott Wave triangle pattern where we can, again, just double clicked here, where we can understand all of this as an Elliott Wave triangle, and we would then come up in another wave E to the upside. And you could even understand it. There's even the possibility for an expanded triangle, something like this possible, where we would then break out to the upside. But I find that unrealistic. such a huge expanding triangle, or even like this, possible as well. And also in this scenario would come down once more, and that would be a scenario where we could even bring another cycle top in this current halving cycle. So reality is we don't know which of these scenarios is going to play out, and I'll show you 3 scenarios. Well, I actually didn't show you my primary expectation. The primary expectation is that we obviously had here this wave 1, the 2, and we could now be in the wave 3 already if we've already seen the low, and that could take us to above $117,000 in a new all-time high scenario. That's the main scenario. Then we've got the scenario where we just have a bear market rally in a wave B and come down once more in a wave C, make a lower low, maybe next year. And then we've got the expanding triangle scenario that's also possible, where we could easily bring another cycle top in this halving cycle. At the moment, it doesn't really make a lot of difference. It also doesn't make a lot of sense to speculate around each of these scenarios, which one it is, because at the moment we don't know anyway. And in each of these scenarios, we would expect a rally. Yeah. Again, there is obviously the scenario that wave 2 isn't finished yet. I would give it a 40% probability. Yeah, as I mentioned before. At the moment, I do give the bullish scenario a 60% probability, as I said many times before. Yeah, so the bullish scenario is at the moment my primary. Now again, see this a bit decoupled from the 3 scenarios I've just shown you. If I'm telling you the bull or the bullish, the breakout scenario, that could be in any of these higher level scenarios I've just shown you. The bullish scenario just means that for now we've seen the low and that we get a valid breakout here, yeah, in whatever way, okay? So that we are not going to see here lower levels in the next few weeks or months, that we are going to go up from here, because we cannot tell the difference at the moment, you know? This could be a bear market rally at the moment evolving, it could be a wave 3 evolving, it could be anything really. We won't know that until we have some more higher degree wave patterns that emerged. Therefore, at the moment, I think it doesn't really make a lot of sense to discuss various scenarios for the Elliott waves on a higher level. It's important to, at the moment, focus on the 1 hour chart, because this is where things are playing out. You won't see a change in any of the higher level patterns for a long time, I think, okay? Because it could be that ABC scenario, it could be the triangle scenario, it could be a wave 3 scenario where we go to new all-time highs fairly quickly. All of this is possible at the moment, and whatever we are doing here will not yet tell us the difference. This will only become evident a little bit later, and as soon as we can see something, I will of course make you aware. So where are we now? Again here also we made a 1-2, another 1-2, and another 1-2. I explained it in the last video as well. What is important to understand is at the moment that we are here in a temporary retracement. We've come into my reversal area again, and we've so far tried to reverse out of it already. At least we're pushing a bit higher. This is not yet, there's no evidence yet that this wave 4 here indeed is finished. We could still come a little bit lower in the green target range. This is the area where with the highest probability I would expect the price to turn around. Now we could still go a little bit lower. We could still go all the way down to 23,360. That would be the wave 1 high. As long as we stay above the wave 1 high, we can at the moment focus on higher. Because below that level, it would invalidate this wave 4 scenario. Now, at the moment, you can actually, again, draw one of these corrective channels here. It's the same story that we had here, where I told you as soon as you break above this corrective channel, you are going to see, well, it's basically evidence that that wave 2 down here was finished. Yeah, and when you saw the breakout, that was indeed the case. Now we've got the same story here. We've got this channel that you can draw, or a descending trend line. You actually don't need a channel. You can draw a descending trend line. And as soon as we break that, it would be evidence for me, or the first evidence, that wave 4 is finished. At the moment, we've come down. All we've done at the moment is Bitcoin has come down to the ideal retracement level for the wave 4. As I often say, the 38.2% FIB level is the ideal retracement for a wave 4. We've touched that, we've held, and we're holding above the ascending trend line, something that I outlined as a strong possibility in the last video, that ideally you're holding above this ascending trend line of this bear flag, and you're holding the 38.2% FIB level, again the ideal retracement for a wave 4. We're doing that for now, quite a bullish candle. All we need to do now is to break above this descending trend line. If we don't, there's a good chance we drop even lower and go down to the next support, which is the 50% FIB retracement, the $23,550 level. Primarily, I would still expect higher prices here than in a wave 5 to the upside. That wave 5 at the moment, that area, I'm sitting between 24,400 roughly and 24,000 940. So this is where I would primarily expect that wave 5 over wave 3 to end. After that, I would expect a wave 4 in white and a wave 5 in white, so we're cascading higher in this scenario. All of that as long as we are holding above this yellow wave 1 at 23,360. Should we lose that level, very important to hold the 22,850 level, and then the most important one here short term is 22,400. So yeah, this is currently my update about Bitcoin. Any changes I make during the day, channel members can see just by watching the chart. I share my chart for channel members on Telegram and Discord. And anyway, there will be various updates throughout the day as always. Hopefully you like the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye bye.